Hi guys, welcome back to another episode of FX Pipsology video analysis. I'm Kyle, and once again thank you for supporting and watching this video. Today I'll be sharing with you a little bit more about the ABCD pattern, how we identify and potentially trade this pattern itself, right? So let's jump straight into the chart. The first pair that I want to show you or using this as an example to identify and draw the ABCD pattern is actually the pound New Zealand pair itself, right? So just let me remove all my Fibonacci, right? Okay, so the first thing for an ABCD pattern, right, is we want to identify a point in which we want to work at, right? So for this pair itself, let's focus on this area. So we can see that there's a major down move and then price is currently trying to go up, right? We can call this a retracement, right? So what we see is that price has gone up and then it made a pullback, a lower low, and now it's trying to retest this area, right? So what we can see is that the first thing that we want to do is we want to see that this retracement itself come back to the 61.8 level to retest this level, but didn't manage to close beyond or even reach close beyond the 78.6, right? So minimum is actually the 61.8, right? So this you can see that price has reached this 61.8 level, but not close below the 78.6. So we can label this as the C point, right? So you have A point, the starting point, B point is a new high, right? C point is your retracement level, which is a higher low for this case. So what we want to do is we want to identify the D point, which is the completion of the ABCD pattern itself, right? How we actually do it, we want to find confluences zone, right? The first thing that we want to do is to pull in a Fibonacci extension, right? Of this leg, the AB leg. So for ABCD pattern, we are looking at the 127.6 extension of your AB leg, right? So this case, the price level is about 2.0142140 around the area, right? So this is only one Fibonacci level. But what we want to do is to find confluences. So normally for ABCD, we want a 1-to-1 harmonic move, right? What I mean 1-to-1 is that the AB length would be equivalent to a CD length itself, right? So we can see this 1-to-1 harmonic move completes exactly at the 127.6, right? So this is a perfect ABCD. What we can do is we can also use this Fibonacci expansion tool. What you can do is you drag from here, from your A point to your B point, right? And then this one you connect here, right? You can see that AB equals CD, right? This is also a measure of 1-to-1 harmonic move, right? So then we have A, B, C, D. So how we actually execute or trade the ABCD pattern is that we actually put a stop order here. So for this case, it will be a limit order. So for this case, we'll be selling this pattern because once this pattern is completed, we expect price to bounce off this 127.6 extension level, right? So we'll be selling the price here. What we do is for our first target and second target, we'll be using the Fibonacci tool to guide us, right? Using the Fibonacci from your A leg to your completion D point itself. So the first target, normally we take it off from the 38.2 Fibonacci. Second target will be 61.8, right? But looking at this pair in particular, right, this ABCD pattern completes not really at a very good level in terms of structural confluences, right? Even if I zoom out, what I can see is that this completion level doesn't really have a much support or now or previous support or now resistance level. So what you can look at if you're really interested to short this pattern or looking to short this pair, right, in the near term is you can look at the Fibonacci at 141, right? 1414 level, right? Which is which you probably get a higher chance of profit, right? Because at this Fibonacci area here, what you can see is that it's quite close to the previous support now turn resistance level, right? And then your stops can go just above the 161.8 extension, right? So this is how you know based on a potential pattern, you can look at potential entry points of where you want to enter this market, right? Another one I want to share with you is the Euro New Zealand pair, right? So you can see that on this chart I drew in two patterns. One is the Gartley, one is a cipher pattern. So let me just bring you through this video mainly focusing on the ABCD pattern, right? I'll just remove the pattern first. This is not working. Okay, so what you can see is that the move itself is actually a completed ABCD, right? So just to draw in the Fibonacci to show you, right? Price make a down move, retest the 61.8, right? Then what we want to do, the next one is to pull in our Fibonacci extension. We are interested at the 127.2 level, right? But we want to have a 1-to-1 move, so we use the expansion to get a clearer idea of where it is, right? So you can see that ABC equals CD. This is a 1-to-1 level, right? If I zoom into a H4, this is the area that we are looking at, the 127.6 and AB equals CD, right? If you recall, just now I mentioned the pound New Zealand, right? You can also look for a Fibonacci confluence of the 138.2 and 141.4 level, which is right here, right? So I actually entered on this pair because of a double bottom. The completion of this ABCD and the Gartley, right? I didn't want to enter because it's on a very huge as in it's on the daily time frame, and then if I enter on a long on this pair, I'll literally be shorting the Kiwi, and because of that it's a losing carry trade, right? So I will be paying a rather high interest. That's why I didn't want to enter based on the daily time frame, right? But based on this double bottom, I actually entered on it, right? Double bottom with divergence. So I actually entered on this basis to get a quick profit out of it, right? So yeah, so this is back to the ABCD pattern. So this is actually a completed ABCD pattern around this zone, right? So you can see we actually first bounce off and then come back to retest it. So if we pull in the whole ABCD pattern to see where we take our profits off, right, it's actually 38.2 level, right? So I remove all this so you can see it clearer. Yep. So you can see if you measure it, the first bounce itself, if we don't take this, the first bounce itself, we actually hit our target 1 already, right? And then it came back to retest. So by trade management rule is that if target 1 is hit, you shift your stop loss to break even. So probably this trade, if you have taken the first ABCD pattern, you'll be taking first target off, and this one you'll be stop out at break even, right? And of course, this is also a double bottom setup, which you can actually trade on, right? And then how you can further extend on this trade if you are still in it is that you can look to trade all the way to the completion of the cipher, right? Which is this level. So just now, you can see from the chart there's actually a cipher pattern, right? All the way until this 78.6 level, right? So this is one way you can take your target off here, right? Why I like this, or why did I decided, why did I decided to trade on this H1 and double divergence is because of this red trend line as well, right? A confluence level. You can see price forms this point, test this line once, twice, and then when it comes back, it kind of like tests it another time. So that's why I enter on the fourth test itself, right? So let's see how price rolls out for this. So just some of the other patterns the other trades that I'm in is actually this one itself, Aussie Cat. This is a Gartley pattern, but it's a pretty deep Gartley pattern because you can see this is the main swing, right? The XA leg. Your B retracement actually exceeds and closed below 61.8, but didn't manage to close below the 78.6. So in terms of Gartley rules, this is still a valid Gartley. But I like to take the 1-to-1 Gartley. That means I'll take this move and I want to have a 1-to-1 harmonic move, right? So that's why usually Gartley pattern you enter PRZ at 78.6 level, but for this I enter around here AB equals to CD because I want to have a 1-to-1 harmonic move, right? So and then if you zoom into H1, you can see a very nice kind of like I wouldn't say a double bottom because it didn't really fit a double bottom, but what you have is actually a divergence. You see price prints a lower low, but RSI prints a lower a higher low, sorry, right? So this is actually a divergence itself, right? On the H4 we can see the candle close, the previous candle closed on the nice pin bar rejection as well. So let's hope this pair we have more upside potential to hit at least our first target, and then I would have a free risk trade for this itself, right? Let's hope for that. Then if you look at pound Aussie, there's also a potential ABCD, right? What I can do, what you can see here with the triangle is actually a very big bad pattern, but within this big bad pattern, there's an ABCD pattern as well. If you can see it, right? This one, AB, right? And then a 1-to-1 CD move. Oops. Right, a 1-to-1 CD move up to the 127.6, right? So this is also a very nice level, but the different things between this pair, the pound Aussie and the pound New Zealand pair, right, is that this 1-to-1 movement and in confluence with the 127.2 level, right, is that very near it there's a resistance level. So for this ABCD pattern, what you can look at is actually entering around this level instead of the 141.4 and the 138.2 level, right? So that's a main difference thing. But of course, if you pull in the confluence between this level, you can also find the resistance level, right here itself. Right, so depending on your risk appetite and how eager are you to jump into this pattern, this level is a valid entry. And of course, this level, if you enter here, you get a better risk to reward because mainly your stop loss will have to go beyond the 161.8, right? So your stops is somewhere around here. So if you enter this level, definitely your risk will be smaller, right? So it depends or what you can do because this is a H4 time frame. What you can do if when price reaches around this area or this region, you can drop down to your H1 and look at the price action itself, right? If you spot a rejection of this level or RSI has been overbought or oversold, what you can do is then enter based on price action and RSI overbought oversold. Right, so that's it for this video, mainly to actually cover the ABCD pattern, and hopefully with this video you will have a clearer idea of how to identify an ABCD pattern, what you can look for in the potential ABCD setup as well, right? If you have any questions regarding this or any comments that you wish to see in the next video or so, feel free to drop your comments or suggestions below this video. And if you really like this video and think that it's useful, do support by liking and subscribe to my channel, right? Other than that, have a great week ahead. Thank you, and I'll chat with you soon.